This is your last margin call. Our guest this evening is Connor. Tonight is our 2020 ER series, presented by Cheddar Flow, a modern options order flow platform. Track and monitor option activity that helps you uncover institutional money flow, all in real time.
All right, we're kicking off the last margin call with our earnings report series that we are doing. We have one of our guests today. We have Connor with us. I'm going to let him do a little bit of an introduction for himself in terms of just where he's at, where you can find him. And then we're going to really dive deep into as much as we can tonight about just the whole ways to tackle earnings reports, the different ways you can play it, how to handle it, biases, just anything you could possibly have. Before we dive into our drinks that we're going to be having tonight, we are going to let Connor introduce himself. We can tell him just the basic things about how he got started, where you can find him, what room he's a part of, but I'll let him dive into whatever he wants. So go ahead, Connor.
What's going on, guys? My name is Connor Pollifrone, so I'm the founder of Boiler Room Trading. Pretty much you can just find me all over YouTube. If you search in the Boiler Room, I will probably pop up, and honestly, that's where I would just say start off, because there's so much free information out there if you really want to get going. At least intrigue yourself. If you're intrigued or interested, find yourself somewhere on the net, just looking some stuff up if you're just trying to get your feet wet or if you're just starting out. But for me, I got started investing pretty much at 18, and it's the same story I tell everyone because I remember it just like it was yesterday. And I basically came home one night and my dad was at the kitchen counter and he said, "Son, you want to learn how to become a millionaire?" And I said, obviously, who doesn't, right? Who doesn't? So I did. I was like, all right, cool. Teach me. And, he's a smart man. He's well off. So I'm like, he's obviously going to shed some light here. So he sits down, grabs a piece of paper, and he basically shows me this formula, and it's super simple. It's called the Rule of 72. So for those of you guys listening in tonight, make sure you look up the Rule of 72 once you get done tonight. It'll probably blow your mind, just like it did mine. So anyways, my dad sits down, grabs this blank piece of paper from the printer, and writes out this formula, and basically says, if you follow this from A to Z, investing just like this, you will make $1 million. And I said, it can't be true. And then I went online and I searched the Rule of 72, what this man just told me. And in fact, the internet even says so. If Google says so, it must be true, right? So, here comes Google and says, yeah, in fact, that's Rule of 72. It's a compounding interest investment formula that if you follow and kind of base your investments off of, it is a pretty accurate number that you will come out to have near your retirement age. And I'm like, awesome. So again, Rule of 72, look it up. Basically, you take your age and then you take how much money you have invested and you basically, divide, So the way it works is you have the number 72 and that's what you're going to divide into. Figure out your age because your age defines what point you're starting at, right? And you have to take a percent interest that you're going to get in return. So let's say you earn annually 10% per year, and let's just say for the rest of your life. And it is possible. Believe me, it's possible. So let's say you get annually a 10% return over the course of your lifetime. You would take 10% and you would divide that by the number 72. And what you'll come to get is 7.2. So you always take the amount you're getting back, your interest, your return, the amount you're making, you divide that by the number 72. That will give you the amount of years that your money should double itself. So the way it would look is Connor is 18 years old and his dad said, follow this rule. And son, we will start an account with $1,000 of your money and $1,000 of mine. And I'll match you just to get you started investing. I said, awesome. Let's just do it. See how it goes.
Right. Okay.
And he said, all right, if you start with 2,000 now, and when you turn, and if you get a 10% return, when you're about 25, 26, that account should be worth 4,000. And after another 7 years, it will be worth 8,000. Another 7 years, 16, 7, another 32,000. And then you're at 64, then you're at 128, and they're at 256,000. Before you know it, it's $500,000. Then you have $1 million, 2, 4, 6, you get the point.
Right. Yeah.
So rule of 72.
Okay.
So that's how I got started investing. And then at 20 is when I really started diving into the market. And that's where I started figuring out how to trade. So first started off with just investing in different mutual funds. And then from there, it really grew into, learning how to trade.
That's awesome. That's great.
How old are you now, Connor?
Currently 26.
I see. Oh man,
Just a youngin.
yeah, you're still young compared to us. Wow. Okay.
Us 30-year-olds.
Basically spent from 18 to 26 investing and then just diving into really just learning the market. So I guess maybe just started a little bit younger.
You definitely did. Definitely started a little younger than me. That's awesome. You got started fresh off at 18.
That's what I would say. And I tell all my friends, I'm like, you have got to start investing young. I'm like, and I just like, I don't know, it blows my mind when you just look at the numbers. And that's really what happened, right? My dad sat me down and said, here, son, look at the rule of 72. He goes, boom, boom, this is how you're going to make $1 million. I'm like, that's all I have to do. That's all I have to invest. And if I just stick to that, I was like, dude, this is awesome. Why not? And so then I just really started grinding at that. And even before that, I was doing, different side gigs and side hustles. I would paint cars and fix cars off of Craigslist and sell cars. Yeah. So I always had these side hustles and, tried to do and sold things on eBay. And so I was always making money some way, somehow. And so then investing just kind of really kicked in, right afterwards.
That's good. That's awesome. Like having that, like even the side income in order to be able to fund exactly what you want to do with your main thing. Like I've been there, I've done that. Like that's awesome that you did that, especially doing it so young.
Does at some point. I think everyone is like, I get it.
I'm a full-time engineer and I still buy and resell stuff.
Exactly. That's extra income. Yeah.
Even for me, it's like I still am like thinking like, what can I do extra here with this time to make some more money? And I don't know. I think honestly that's just one of my biggest fears. It's like I just always was feared like I don't want to grow up and like not have enough money to really settle on and do it. So I think the fear of not having that comfortable life in the future just keeps driving me constantly, Well,
I mean, you got a really successful YouTube page. Like, I don't know, like you didn't really give that as much credit as you do, but I mean, like you got some great content that's out there. Like, I just want to like say that, like when I asked you to come on the show, like I reviewed a lot of those episodes, and that's good stuff out there. Like I appreciate it. I really
do try,
I mean, you're putting new videos out every day too. So I mean, the hustle on that, like immediately, regardless of even what it is, like I respect the hustle, and then the information that came with that, like I already respect that. Like, so you got a double respect out of that. So
appreciate it, man. I really
you're doing good with that, man.
Yeah, I tried pretty darn hard these days.
You're doing good. You're doing good.
In general, but.
Yeah, all right, so let's start off with things. So before we start every show and everything, we always talk about what we're drinking, and it's just the thing that we do because it's the last margin call. A little alcoholic play on this, and so Bear, if you want to lead us into this, what are you drinking tonight?
Of course, Tim. Per the usual, I am not drinking alcohol because I don't have any in my house right now because I've been lazy. And okay. I am again having a Target brand bubbly sparkling water. Raspberry is the flavor. Quite delicious and refreshing. Probably the bubbles are eating the enamel on my teeth, but it's good. So that's what I'm drinking tonight.
All right, you know what? Next show, you have to get at least something going for us. Like, just give me like a simple like cocktail recipe or anything.
Right, I will go to Costco and buy a $15 bottle of whiskey, and I'll drink.
That's all I've ever wanted from you. That's all I've ever wanted.
I'm a cheap man, Tim. Cheap.
Connor, I don't know if you're actually drinking, but if you are, or just whatever you're drinking, could you just tell us what you are?
I'd be drinking right now, which I usually will have one in the morning before the market's open. It's a coffee and Bailey's.
That is a good choice. I haven't had that in ages.
Coffee and Bailey's, baby. You cannot go wrong.
The thing is if Tim had coffee and Bailey's, he'd have to have some like super fancy way of making it, where he'd like open up an entire, spice cabinet and add all kinds of stuff. Right, which you'll hear about when he tells. I'm sure he's drinking something fancy right now. So
it's not that fancy, all right. I wanted to get something really nice. I wanted to feel good. We had Connor on here, and I'm really excited about that. And so I went out and got myself a nice bottle of Bullet, and it's mid-tier, so it's not too bad. And so what I just did is just a simple old fashioned, and it is just you put your one part of whiskey in there, you put your little garnish of orange that's going to be on there, you have your bitters, a little, and if you have your own simple syrup, you add that, but just something really plain and simple. But I wanted to feel a little classy tonight, and I think I did. So that's what we have. We have our drinks for tonight. So what we're going to do is we are going to jump right into our ER options series. This is the first one. We have a few people that are going to be lined up that are going to be coming in over the next 2 to 3 weeks. We want to try to push for about 2 people a week to come in here. I know we have Paul that's going to be speaking tomorrow with us, and I'm really excited about having him on. He's great when it comes to kind of handling these ER plays as well. So right now, just before we even do anything, we have to put out the disclaimer that we are not financial advisors. Please do not take any of our plays as recommendations, or that we have knowledge to any insight or anything, just to protect us from anything, and nothing can be thrown back at us. But what I want to know, and why we brought you on, Connor, is when you're going into the ER season just in general, which starts off next week for anybody that's listening, which is Financials Week. Are you heading into this ER season with any sort of mindset predetermined before you even enter? Like media is telling you it's going to be bad, it's going to be good. Just give us some little insight on how you tackle it when you know it's right around the corner.
So for me, really, when it comes to the earnings seasons, we're always going to see the banks kick off, obviously.
Yeah.
And, I typically just avoid the banks. I know many people love them. Honestly, I just don't like banks in the first place.
It's a love-hate with me.
It's a love-hate thing with banks. So first, I don't even like banks, but I just really am not a big fan of the way they trade first off. But I like to first kind of to see how the bank's earnings go. I don't actually trade them, but I like to see how they go, just to see how the banks have been performing, because that's just a good scope on the overall economy, so to say, with banking. Exactly. Right? So it's good to see that, kind of see how we've been trending. Mm-hmm. What was the previous one? How is this one doing? And then when we go into the earnings, for me, if I'm going to play earnings, it's really all about playing the big names. All right. And then there's occasionally a couple small names that I'll focus on. So each morning, basically the way it's going to work for me throughout the earnings seasons is there's going to be a handful of stocks that are all gapping up, of course. Mm-hmm. Now, the thing that you will notice about pretty much any earnings, unless something outside of the norm happens, which again doesn't happen all that frequently, like somewhat frequently, but to the point where you're probably going to catch it frequently, most likely not going to happen. So that's what I'm saying. I don't jump at the unnormal or what's most likely not going to happen. So whenever you look at an earnings play, even after it's happened, you will most likely come to find the price action of the stock has either gone straight to a support level or it's jumped straight up to a resistance level.
Yeah, exactly.
Like 8 times out of 10. Right after the report happens, it's jumping straight up to resistance or straight down to a support. So even before the earnings happens, if you look at the stock and go, what's like the most or nearest resistance point or nearest support level, there's a good chance that's probably where it's going to go to if it does in fact have a somewhat decent report or somewhat terrible report. It will go to those levels. And if you match that up with the implied volatility, like right before market close on the day of the earnings, you'll come to find that the implied move will probably end up right around those levels. So if in fact you are an options trader, that's one way that you can kind of go about, basing strategies around. But for me, it's going to be all the big names like AMD, MU, Netflix, Tesla, Facebook, right? I'm looking for, I like the big name ones because depending on the price too, they can see a lot of range throughout the day. So that's another thing. Everyone's like, oh, how do you catch the earnings move? I'm like, if it jumps 10, 15 points, there's going to be 3, 4, 5, 6, 7 point pullbacks or moves even throughout the day on them sometimes. So for me, it's all about seeing how they trade and then following it into market open for the most point.
Okay. So you're not necessarily jumping in beforehand with a preconceived bias towards it, or you have necessarily just like a personal belief on them. Like I believe that let's just say that, for instance, that semiconductors are going crazy with sales lately. I'm going in there expecting this to be bullish because what I've heard through the news and media outlets and social media and all these other things is that these things are soaring. You're not going into any of this with a bias already. You're kind of just, you're waiting for things to play out necessarily, kind of almost playing what the chart tells you essentially.
Yeah. So for me, basically reading price action. I'm not a huge, and I don't really base trading much off of indicator too. A lot of it comes down from past experience, practice, understanding the way things are most likely going to react throughout the day
Hmm.
at certain price points. In terms of day trading,
Okay.
if it comes to any sort of like, and again, so going back to the earnings play, so no, for the most part, for me, it's not about trying to, figure out if this particular sector is hot and this stock will jump in that sector for me. Most likely, again, my approach will be straightforward to following the big names, looking at how the report came out and then trying to judge the bias of the market afterwards and after I kind of see things playing out a little bit on the day.
Okay. All right, and then so another thing that I wanted to talk about that is kind of big with just traders in general, like heading into ER, that these happen is a lot of people kind of tend to look towards, call and put activity, these sweeps, these blocks that go through, and they kind of say, oh, this is hedge funds, mounting their charge against, we're gonna push this higher, we're gonna push this lower. I mean, do you even consider that when you enter that? I know that it for a few people out there, they're paying attention the day before all day of seeing what goes through, what orders are flying in, and they're saying, "Yep, that's what they know in some insider information are doing." Are you even doing any of that, or are you just like you don't even just pay attention to it at all?
No, and for me, no. For the
Good.
most part,
Yeah.
no. So you're talking about kind of like dark pool orders or
Yeah.
big call sweeps going into. So yes, there's been moments where, of course, you'll see call sweeps come in, and you're thinking, maybe they'll do a call sweep that's maybe even a week out. You see them all the time. They'll come through even on Benzinga if you have
Yeah.
Benzinga,
Yeah.
and they'll come through in the TOS news chain too.
Mm-hmm.
But yeah, you'll see call sweeps all the time, and so I've paid attention to many call sweeps, and not even with the bias of following in and thinking that this has to jump because someone's grabbed six 700 800 contracts, and that doesn't make me want to jump in because I've seen multiple times where we get that kind of hype or that kind of news or that maybe that idea that something's going to move a certain way because we're seeing big orders go through. And in fact, it does the opposite of what you think. And so there's been so many moments where, you think something because you heard something or if you've seen something come through on the wire and something completely opposite has happened.
Yeah.
And so I don't go in with that bias, seeing a call sweep or seeing big block orders and wanting to jump in. And that's because I've seen so many scenarios where it just doesn't happen. And there's multiple times where we see analyst upgrades going into earnings.
Mm-hmm.
And then next thing of course, it tanks. So,
Exactly.
that's always been my thought process of the opposite psychology to the market, where the market wants you to think something and then it does the opposite. And that's always been my kind of theory too, going into a lot of earnings plays is whatever you're hearing, most of it, most of the hype, whatever the hype is, oh, it's going to be super bullish, super bullish, super bullish. A lot of times it's in fact the opposite. We'll see a lot of analyst upgrades, 5, 10 points, 20 points going into earnings, and then earnings come out and maybe it gaps up, closes gap instantly, and actually continues fading. So I've seen that, multiple times as well.
Okay.
So is that why, just to expand a little bit, is that why you find yourself trading the actual stocks more than trading options? Like, I know that I've seen some of your videos where you've done options trades in the past. Tim and I are primarily options traders, and a lot of people get pulled into options because they see people making these huge gains on stuff, which it's for people to pick on their own. But would you say that's kind of why you have stayed clear of options for these plays?
Yeah, so like I'll do options occasionally. So for me, if I'm going to do an option play, for me, it's more about if I'm going to do an option, there's really one way that I'll probably do it because most of the stuff I do is all directional playing of stocks, right? So my experience and where I'm good at is directional bias playing when I can, factor in momentum. When I can tell there's momentum and something's going to have a jump, that's where I'll do my best. So what I would be doing is basically buying premium for these moves or, looking to profit off the run on premium for some of my plays. So, for example, like NUGT, the gold markets were breaking out like crazy recently, and I even knew they had run up a little bit high in the move, and you could argue that they are overbought currently. I mean, if you go look at the charts of Ford/GC, the gold futures right now, and GLD, you're going to see that they've ripped, and they're kind of through highs right now.
Yeah.
And so one of the plays that I did was grabbing, I think, what is it actually? I still have them. Hold on one second.
Yeah, no, go ahead.
Of NUGT. So I had some shares on NUGT. So I've been long gold and silver for pretty much 2 years. I started buying in 2 years ago into gold and silver pretty heavily. And so recently I'm tracking NUGT, and I'm really tracking the gold market. So I was already long gold, like 700 shares NUGT, and was doing well there. And I was like, you know what? Who cares? I'll throw like a couple $100 at these like random, kind of out of the money plays. Cause I'm like, if the gold markets do break out, like I anticipated they would, we have NUGT as a 3 times leveraged stock. So I was estimating the move we would most likely have seen in NUGT if it broke out. And so I bought some calls that were just super cheap. Let's see, where are they? They were January's. So these are really far out of the money. So it was a lotto play that I just did recently, and that was a couple days ago. We got the January 24th $47 calls, right? And so they costed me, I think, like 20 or 30 cents or something like that. So pretty cheap. I think I bought like 9 of them. So nothing too crazy. And so again, so like that's a directional play where I'm like, okay, if the markets do in fact go through this really big push, $200, I'll make a decent small return on that on top of the shares I already had. So you can see I wasn't going heavy risk onto something like that, so that's one play that I've done like just recently options wise. But so pretty much
are you taking that play?
I'm going to do.
I'm sorry. Are you taking that play simply because you're already attached to the underlying itself, already being long the NUGT, and so like you're kind of and necessarily like building off of your position with that play itself?
Yeah, so okay. And that's part of it. Is I've been long the gold miners, ETF, SLV, and Spider GLD. I've been long gold for like 2 years, right? So I've been tracking this heavy, and I was like, this is gonna go, and it was so close to ripping. It really was, and I think it's still gonna rip here, within the next couple weeks. So these might end up expiring, and even if they do, it's okay because I'm still long the underlying, and so I know that I have shares, and if I want to, of course, I can write somebody, and so I know I can play around with it in that sense. But I usually don't go into that side of options too much. But
it can be risky too.
That was one of the recent plays.
Yeah. So okay, so that's fine too. So, but I guess that kind of was playing into my other question too. Well, maybe it can go into.
Let me touch on that real quick.
Yeah, go ahead.
Basically, I was getting at is if a lot of times if I'm going to do some options, it'll basically be because I can see volatility increasing in one direction or the other. So I'll try to find something that's relatively cheap or something I know can have a big bang for its buck.
Yeah. Because
I normally trade directional, anyways, right?
Yeah. Exactly. Okay. Yeah. So. That was what I was going to say too. With one of the things that we kind of talked about too is being a buyer or seller of premium when it comes to this. And do you find maybe you said that you're kind of more directional when it comes to this? You're more of a stock player when it comes to this. Do you find your room? Oh, go ahead. Yeah, go ahead.
Oh, sorry. I'm interrupting you. Sorry,
no,
I'm so used to talking all the time, all day. So you go. Let me let you talk. Answer the question. I'm sorry.
You're fine. You're fine. Yeah. So typically, you become a buyer or seller when it becomes in premium, when it becomes these ER plays, just all based off of your own personal bias of playing the move. You don't think a move's going to happen. That could be the selling the premium side of things. Do you, or if you know someone even more personally or how they trade in your room itself, like what do you find that most people that are playing these types of plays are they being buyers or sellers of premium mostly during ER season?
I would recommend, no, absolutely. So I would recommend to any beginner that's even going to consider trading options is the best bet is really not to do what I just did, which is go long options and buy premium because of the natural decaying factor of an option. Right. So what I see is most traders will naturally jump into the options market and they'll think that this move is going to happen in like 2 or 3 days time,
Right.
and then they'll buy this really cheap option, and
Exactly.
and then they make no money, and they're like,
Yep.
what the hell? Like, what's going on? I'm like, well, dude, you bought an option that expires in 2 days, and you're trying to see if the stock's going to jump 10 points. It has an average true range of like $1.50. It's not going $10 in 2 days with an average true range of $1.50. It's just not possible. And they're like, oh, I see now. I'm like,
It's hard to
yes,
explain
right?
that to some people though. It's just like, but they're like, but
And
it's
I'm like,
ER.
so-
But things are gonna happen.
So then it's, yeah, and they're like, well, it's ER, and I'm like, okay, dude. Like, it's like, for example, go read the TOS news thing the day of an earnings, and it's gonna go, look at traders are getting ready to straddle this option.
Mhm.
It's like, okay, watch this, and then like next thing you know, they all get blown out because it spikes up, comes back, and then it just stays flat, and they
Yeah.
get IV crushed the next day, and I'm like,
Exactly.
boom, perfect. Happens all the time. So that's one reason why I don't pick super directional on options in earnings, because you're going to get IV crushed half the time.
Exactly.
And so that's why I choose not to even straddle them more often than not, because half the time they just get IV crushed. So if you're going to be doing the options as a beginner, and if you're going to even consider doing them around earnings, for one, I think you should be a seller of the premium, right? So
Mhm.
if you can understand, for one, at least average true range. When you understand average true range, I mean, it becomes far easier, right? So let's take this example. AMD is coming out with earnings. It has an average true range of, right now, it probably has an average true range. I could look it up. I'm not. It probably has an average true range of $1.25 right now. So we know that on average, AMD moves $1.25 per day. So going into the day, you shouldn't expect that you're going to, whip in 1,000 shares long. You're going to whip in, 10 contracts, and it's going to jump $4 on the day. It's just not what it's meant to do. The only time you could ever anticipate a move like that is A, around earnings, or B, around a big technical breakout. C, it have to be a crazy news-driven event to even get enough buying and attention out of the stock to make it move that much. So for most beginners, you guys should really sell premium, right?
I agree.
So a good example is if you have stock like AMD, or it doesn't even matter, like Netflix, right? The average true range is a couple bucks per day. So pick a point on the chart where it is highly unlikely that this stock is going to get past this level. You don't have to be directional. You could say, you know what, rather than trying to pick which way this is going to go, I know that this stock only moves about 60 cents a day.
Right.
And I can talk about that too, stocks that move with lower betas that don't go so crazy on the day.
Right.
So you pick these 2 points, right? Pick 2 points that the stock's probably not going to get past, and then you go and you sell premium. Sell it, and that's what I'm saying. You basically sell a sucker's bet, right? That's what you do. You're selling a sucker's bet. Find someone who's dumb enough to take the bet, and you just reel them in and take their money is basically what I'm telling you to do. Sorry.
No, I genuinely think that's great, because that's exactly what I do. Like I am a huge seller of premium when it comes to ER season, and I hate buying. Like I hate it. It just
you just like it's that's what I'm saying. Like I just don't buy options around earnings, or half the time. The only time I'm buying an option long is when I feel I basically know something that other people don't.
Yeah.
Just like on NUTT, right? I've been riding gold for like 2 years, so I'm like extremely knowledgeable on the market and extremely knowledgeable on how that's been trading. I've been in it for so long, seen it go up, seen it go down. It can't scare me at this point. So it's like,
right,
to me, that was worth taking the risk there. So, and that's another thing, is I wanted to do something on YouTube of just like an account growth thing of just selling premium. But my life is so busy, and then I make all these videos, and it's just hard to juggle it all at the same time. But that is kind of like next on my list. And I even believe my partner Brandon Walsh, if you guys, I think he has a small YouTube channel. Doesn't do too much on YouTube, but he is a tremendous technical trader, and he does really good with just options in general, like selling a lot of premium. His and he's even found a way, which, I mean, it's not really a secret, but if you don't know it, it'll seem like a secret. But he even introduced me to a way that I didn't know, that beginner traders can get around the pattern day trading rule by using options, which most people don't know. You can actually trade nonstop with options as a beginner without even breaking the PDT rule, right? And most traders want to get past that PDT rule. It's kind of dangerous. You shouldn't do it, but you could if you wanted. I'm just saying.
Yes.
But there is a way to do that. But
Be careful.
yeah, don't do that.
Be careful.
That's a slippery slope. You don't want to go there.
Right.
It's a good slope, but definitely a slippery one.
Yeah, the double black diamond.
Right.
Okay. So don't do that. So if you're going to do it though, if you guys are, beginner, you're going to get into options, best recommendation is figure out how to sell premium, because and make it a sucker's bet. Make it something that it's just not going to win, right? So again, AMD only moves $1 on the day, $1.25. Sell someone an option that expires in 2 days, it's like $7 away. If you can and actually make money, you still have to look at how much it's going for, how much time's left, because you could just be selling an option that it's just so pointless to even try to sell. You might have to sell, 30, 40, 50, 60, 70 contracts to even make money off it. You don't want to do that, right? So there still has to be enough time left on the option before it expires so that there's actually some like value and worth to the option that somebody would be willing to pay for still, right? You can't be selling an option that expires in 20 minutes. Like, who's going to buy that? No one. So you got to make sure it has some time to it, so it still has value to somebody somewhere that thinks something's going to happen.
Okay. Yeah.
For sure. So I know you said you generally trade the same tickers, or you have, some big name ones that you trade. We are going into the earnings for financials next week. I know you said you don't like to trade banks too much because, banks are pretty much evil, and I agree with you there. But when these earnings seasons come up, do you anticipate trading off of those, or is it something that where you wake up in the morning and you're like, I'm going to trade my same 10 tickers, whether it's going to be earnings or not? Or do you shift your trading towards, earnings calendar?
Yeah. So basically, So actually, to answer your question briefly, or not briefly, but just in general. So when earnings come out, I'll basically take like maybe 3 or 4 stocks. Well, depending on how busy the week is or how busy the day is. If there's like a couple good ones, I'm going to put a couple good ones on my list. So each morning, the routine would be wake up. I'm going to run through the list of stocks that are gapping up. I'm going to read kind of through their earnings report, and then I'm going to get a sentiment kind of based on the news, reading the price action, and then I'll follow a couple ones that I think are hot, right? And then so I usually go based off of like, this is how my watch list will look each morning in the earnings season. Is I'm going to usually have like, if there's 3 big names, I'm going to watch probably like 2 of them. And then I'm going to mix it up with like 2 or smaller names that a lot of people aren't watching that might have that explosive move because they're just kind of hiding. A lot of times we'll see that. And then I'll have like Netflix and Facebook and Google, or not Google, but like Netflix, Facebook, Apple. I always have those. It's not like I'm watching those, but I just always know those. So it's like, I'll just pop in midday, be like, oh, that's a decent level to trade off of, and maybe make a trade on those. So those are kind of always the go-to norms where if they have good volume on the day and they've set up just right, you can probably find a trade on them at least somewhere throughout the day on the big names because they always have volume and activity, right? But, like, for example, recently, like Zoomies had earnings, right? But it wasn't very active in the morning, pre-market, not a lot of volume, just kind of one of those stocks you can tell all it needed was just like a little bump of volume and you could cause it to squeeze. So instantly in the morning, it squeezes up, and it's squeezing up on like no volume, right? And you can just see the selling volume starting to come in on these tops. So that was one of the recent earnings plays that, not a lot of people are watching Zoomies. It pops like $3 and then it drops like 4 or 5. It's like the perfect short, right? So a lot of times those like light volume earnings that squeeze up, those will be nice ones to trade too. They're a little thin, and on the spread, you can get a little whacked out. But yeah, usually it's going to be a mix of just a couple earnings that I'll wake up in the morning, see which ones are like decent gaps, maybe have room to run into supports that aren't straight at supports. But as you guys know, a lot of these gap downs are going to get filled. It's just, they're going to, again, it's the opposite trade. A lot of times that gap down's going to take it so far out of the mean of the standard deviation. You're going to be, so, you know what I'm talking about?
Yeah. Oh, no. Yeah, of course. Yeah.
So, and that's another thing too. You're going to get that a lot of traders don't even know about. And again, it's standard deviation. It's a statistics, but you don't even have to know statistics to understand the concept behind it. And that's another thing if you're a trader. Look into just learning at least a little bit about standard deviation. I'm sure it'll just be a complete eye-opener and change the whole world for you. Drastically, actually. So, yeah, look into standard deviation. That's going to help you understand when stocks have pretty much made their move, or they're about to make a move, or they're breaking out. of their standard deviation. That is basic. Whenever you see a big move, guys, it's usually because it's breaking out of the standard deviation. That's breaking out of the normal. That's not normal. It's doing something unnormal. Big breakouts, they're not like, they're normal, but they're not normal. You see what I'm saying there?
Oh yeah. So actually, I wanted to. So kind of before you get too far going with this, I did want to ask one thing with this. When it comes to playing these types of things with earnings come up, I know you're talking about, if one thing's going, there might be some lesser ones you were just talking about like that. In the easy thing to say is, like if JP Morgan's running, you might have Bank of America that may follow suit with it. So like you obviously have that with tech, and if Nvidia is going, AMD, Intel, MU, all those other things may be running with it. Do you ever find yourself just saying, all right, Nvidia is going first. Nvidia popped off this, dropped off this. I'm gonna, step away from the premium that just could be jacked or through the roof, and just crazy to trade. Spreads are too wide, and you're just finding yourself playing these lesser ones. Is that kind of what I'm hearing too? Is like when you say you could find like the lesser names?
So let me rephrase that. I don't really know how to. I always kind of struggle even pointing this one out. So, like, for example, I really like earningswhispers.com. I don't know if you guys use. They're on Twitter too.
Yes, of course. They give you that great that great little
it's
info.
Just like a super easy
graph.
layout.
Yeah.
Really, like, super easy layout. You just kind of like know all the big name companies that are coming out,
Mm-hmm.
right? So like on that list, and a lot of people use them, right? A lot of traders use them, so that's kind of where the eyes are at the market. They're going to be on those ones for
Exactly.
the day. And then when I come in the morning and I'm running my scanners, which are through Trade Ideas, I like them and I just naturally use them. So I'll run those scanners, and each morning, I'll see the big names that are off earnings that obviously came from that were on earnings whispers, right? We're going to see those. But what ones are gapping up or gapping down as well that aren't on earnings whispers, where most of the eyes aren't actually currently at? Like a lot of those ones can also be good movers, right? So those are going to be some of the ones that I'll pay attention to. That's what I'm saying, like the lesser names on earnings days, you'll have the big names, AMD, Facebook, and Netflix. Everyone's watching that. There's a lot of eyes on that. And the next thing you know, there's just like this little nonchalant stock that you don't even like know the ticker of because you hardly ever see it. And it's just random day on earnings, and the volume's going through the roof and it's just squeezing out, right? So like there's some of those ones. One of my favorite plays off earnings actually is just that. Again, I don't know how to explain it other than just like random tickers. I swear it's just a random ticker that will gap up on earnings. And it's a company you hardly ever would even look at. And they'll squeeze up out of the gates. This is one of my go-to plays. They'll squeeze up out of the gates, and they'll go up and maybe one pullback or something. And then they'll kind of hit a high, and they'll have like a decently good sized pullback. And then they'll squeeze up again through highs, but on far less momentum. And we get a just instant bearish divergence, kind of like out of the gates, 10 minutes. Yeah. And that's usually a good setup to start shorting into as we start to pull back off that early morning momentum. And that's kind of one of my go-to plays. But that usually, I guess I could work in a lot of situations, but I find it to work pretty well on like those random tickers.
All right. Yeah, that's perfect. That's what I wanted to hear, like leading into this and kind of tackling the whole earnings report season that we had. We hit a bunch of freaking things tonight. We hit the biases going into this. We hit, like what are you looking for? How are you playing it? How other people may be playing this. Was there anything else that you think that maybe we missed upon that maybe would be beneficial for someone that's listening in, that would be saying, like, okay, maybe I need to take this into account heading into this? Or do you feel like we hit everything?
Yeah, I guess, the only really last thing I could just touch on is if again, especially if you're a beginner, don't try to jump in on earnings before them. If you really don't know what you're doing, don't try to jump in on them before the earnings, right? And yes. Then if you do, you have to at least learn the implied volatile or implied move, which is the implied volatility on the stock. So you can find out if a stock is meant to go $5 on earnings, jump or go down. You can find that out beforehand, right? So for example, if the stock is only meant to move $5 on the earnings, don't go buy an option that's like $30 out of the money. That basically means the stock it's telling you it's only going to go 5, possibly, potentially.
Yeah.
5, maybe 6 if you're lucky, and you just tried to get it to go 30. Not gonna happen, right?
It
That's
just
what I'm
needs
saying.
That's what I've been
500%
doing
break.
wrong this whole time.
Right.
It's not gonna happen, Bubba.
You'd be so
So, like,
surprised
that's
how many
another
people
thing,
do
right?
that though. Like it happens a
It,
lot more than you think. Like
yeah, and it's like that's the part of trading. And like if I just can go on a rant here, is that okay? Just
no,
kind of
no,
like a
yeah, go
little.
ahead.
Yeah,
It's all
fire
you.
away.
And so this is kind of the thing for me. I've been doing this a long time, and I've seen a lot of things, and I've made good money, and I've lost good money. And so I've been around the block in this game, and the one question that never fades, that always becomes a new and improved answer for me, is from someone, and they go, so like what's the secret? Like, how do I know a stock is going to move? And it's like, after you just learn so much about this game, you can never just give them that straight answer, because it's just so false. It's not real. It's like, I want to tell you that when it breaks this wedge, it's going to go, but then it fails 100 times, and it's because you don't understand all the aspects. And what
Right.
it comes down to is, if the most important thing is, you have to understand what a stock is going to do and how it's probably going to do it, why it can do it, situations that can be this profitable. Like, people are like, how do I get a 2-to-1 risk to reward ratio, or 3-to-1, 5-to-1, 6-to-1, right? They're like, you have to be a profitable trader, you have to have right ratios. And they're like, well, how do I get that? And they're like, whenever I try to do it, it never works. I'm like, well, maybe you're just trading the wrong stock. That's the answer 90% of the time. Whatever you're trading is wrong, right? That's 90% of the time. If you're trying to get a 5-to-1 and you're not getting it, it's probably because the stock just isn't meant to give you that much. So you first have to understand how much a stock can probably move. Once you know how much it can probably move, then you can start building strategies or ideas around that would say, hey, it can probably go to here, which means I can risk this. But if you don't even know it can go from A to B, how can you put your risk at C? It doesn't make sense. If you don't know at least a little bit of what it can probably do, then you have no idea of anything yet. So most important thing is learn average true range. I would say that's just one of the most important things. Learn average true range, because you'll see that stocks normally will move very close to that amount, and then they'll stop. That's another good one. Like, stocks will have a bullish day. Like, traders will be watching a stock, has a really bullish day, and then at the top of the day, it looks like it's forming a bullish pennant, and then you think it's going to keep going, and it just keeps trying and then never goes, and then all of a sudden it rolls over on you. Yeah, it has an average true range of 3. It moved 370. Like, it's already well above what it was supposed to do.
Right. Exactly.
Exactly.
And
so
yeah, I think that plays right into ER2 as well. Like, I think that's great. Like, I think that plays right into ER, and everything is like playing off the expected move. Don't go beyond it. Don't take the super risks. Like you were saying, a 500% jump on ER when it's only expected, maybe even a 5% or excuse me, like a 5% jump in the underlying, or a 10% jump in the underlying, just based off that. Like, be realistic, and I think that's a good point to tackle and handle as well.
Absolutely, because that's really it, guys. Like, if you're gonna trade, what you have to realize, if you're gonna trade, your mind wants those really big, beautiful looking moves, right? Like, when you envision an awesome trade, you're envisioning this like super nice setup that just rips, right? But that doesn't happen more oftentimes than not. More oftentimes than not, you're gonna maybe be like kind of in like a sluggish, kind of slow going trade, and then maybe it will rip. But more oftentimes it's not. And when you start to realize that it's just trading probabilities with the lowest amount of risk, like, oh, this is like a decent setup with pretty low risk, and it can probably do this, but I'm not expecting too much from it, then you'll start having more winning trades, because you're not looking for something to happen outside of the normal. Hint, hint, a random break above the standard deviation, hint, hint, something like that. Okay.
Right. Go ahead. Sorry.
No, that's good. I mean, I figured we probably ran through it all.
I feel like we hit everything. I think we hit it beautifully. I think we tackled a lot of information. Like, I can't thank you enough for coming on here and just giving us your insight and everything that's happened. Like, you didn't have to do this. Like, it was amazing that you even came on here and did this with us. I appreciate it so much.
Of course, absolutely.
Like, I hope everybody gets a little, gets help from this as well. Hearing from this, they get they can reach out to you and I want to like make sure I get the last plugs in there. You can find them at the Boiler Room Trading, I believe is what it's called.
You guys, Boiler Room Trading. Make sure you guys go check him out. He's got all kinds of free stuff on the website. If you're just getting started or you've been doing it for a while.
And YouTube
it's
channel.
It's good to have a reset and dig through things. So
exactly.
And don't stop with me. Just like keep going at it, because there is so much that I don't know and so much stuff that other people know that's just such impressive work that you just can't stop. And you're gonna have to find where you fit best. I mean, that's basically all this game is figuring out what you like, what works for you, and you're just taking a little piece of what everyone's got, and you're really just gonna end up building your own strategy around that. And see, like I said, I trade equities, but I know exactly what the dudes in the options market are doing. Right?
Exactly.
It's like the dudes in the options market know exactly what I'm doing. Like, and that's
right.
Another part. Like, you have to understand like what environment you're in. You're in a big game, right? You got a lot of people ahead of you, and a lot of people that are probably going to end up always being behind you in this game. That's another important thing. If you can start figuring out how your opponents play the game and what's most likely going to happen, then you can start taking advantage of that. And so that's it. Just keep learning and looking at what everybody else does and getting like an insight from everybody else. And eventually you'll build a strategy. You'll start figuring out what other traders are doing and why they're doing it. And you'll start to learn how to figure out why the markets move the way they do.
Awesome. Up next, this coming week, we have Paul that's going to be joining us. Paul is an LSU finance grad that's going to be coming in. He handles his World Series of ER that he does on the fund. So be sure to tune into that. We'll be recording that tomorrow, and we'll probably sometime this weekend, I want to say. So tune in.